Let's get into it. If you are sick and tired of watching endless trading videos and not seeing any real change in your results, then you are in exactly the right place. Today, we're not just learning a concept, we're building a complete framework from your mindset all the way to your execution. This is about finally mastering how to read the market's next move. Let's begin.
First things first, we have to talk about the biggest thing holding you back. It's this idea that binge-watching trading content is productive. I get it, it feels like you're learning, but it's a trap. It's just passive entertainment, and it's probably the #1 reason you're stuck.
And here's why. Look at this number, 50%. That's roughly how much new information the average person forgets in just 24 hours. So if you're just watching video after video, you're pretty much guaranteeing that most of it is going in one ear and out the other.
So what's the solution? You have to truly own the concepts. And you don't get that from watching someone else do it. Ownership comes from practice, from doing the reps, from grinding it out until it becomes second nature.
So before we even dream of looking at a chart, we have to fix our learning process. And this might sound completely backwards, but I promise you, in trading, slowing way down is actually the fastest path to getting good.
So here it is. This is your roadmap to actually mastering something. You take just one, concept per week. First, you backtest it like crazy, see how it worked in the past. Then, you take it into the live market and you forward test it. This whole process forces you to get the why behind the moves, not just memorize some pattern.
Okay, let's shift gears and talk about the absolute foundation of all of this, your mindset. Because I'm telling you, you could have the best strategy in the world, but if your head's not on straight, it'll all fall apart the second the pressure is on.
Think about it this way. The 1-hour chart, that's your bicycle with training wheels. It's stable, the picture is pretty clear, and it's where you learn how to balance. The 1-minute chart, on the other hand, is a super bike. If you hop on that thing without mastering the basics first, you are going to crash and burn in all that market noise. It's guaranteed.
Now, I want you to really think about this for a second. What's the real win in trading? Is it the money? Is it hitting your take profit? Your answer to this question tells you everything about your trading psychology.
That's it. That's the whole game. The only thing you actually have control over is whether or not you follow your plan. You can stick to your rules perfectly and still take a loss. But if you followed your process, you've actually won the battle that matters for long-term success.
Let this one really sink in. When you take a loss but you followed your rules to a T, that's not a mistake. It's not a failure. It's just the cost of doing business in a world of probabilities. Once you truly accept that, the emotional roller coaster starts to flatten out.
All right, now that our mindset is focused on the process, let's build the technical map for that process. This is the step-by-step system we use to find and execute high-probability trades, and it all starts with the big picture.
Everything, and I mean everything, starts with the break of structure, or a BOS. When price smashes through an old high or low, it creates a new trading range, a new leg. That's your green light. That's the market telling you, okay, pay attention, it's time to start looking for a trade.
So once we get that new leg, we map out our key zones, our points of interest. You've got the first POI, which is often a mitigation block. You've got equilibrium, the 50% fair value level. Then you have the OTE, or optimal trade entry zone, which is a sweet spot for reversals. And finally, you have the extreme POI, which is usually an order block right at the start of the whole move. These are our hunting grounds.
And this 4-step process is what keeps you out of trouble. Step 1, you wait for a clear break of structure. Step 2, you wait patiently for price to come back to one of those zones we just marked. Step 3, this is the crucial one. You wait for confirmation. We drop to a lower time frame and look for a market structure shift. Only then, after you get that shift, do you move to step 4 and pull the trigger.
But what about FOMO, right? That fear of missing out. Here's how you handle it like a pro. If you get your confirmation at that very first POI, fine, enter with a partial size. If the price keeps going down to your extreme POI and confirms again, you add the rest of your position. This way, you're in the game, but you're not breaking your rules.
Okay, this is where it all clicks into place. We're about to get into what is, in my opinion, the most powerful skill in this entire playbook, using the daily candle to figure out our bias for the next day's trading.
So the core idea here is actually really simple. The high and the low of the previous day's candle, those are giant pools of liquidity. The market is drawn to them like a magnet, and how the market reacts when it gets there tells us pretty much everything we need to know about where it wants to go next. First up, you have the liquidity run. This is when price pushes through yesterday's high or low, and this is the key, the daily candle closes beyond that level. This is a huge sign of strength. It tells us the market wants to keep going in that same direction.
Now here's the trap, the liquidity sweep. This is when price just pokes through the high or low, grabs all that liquidity, and then slams back down, closing inside the previous day's range. This is a massive sign of weakness. It's a fake out, and it usually signals that a reversal is coming.
And really, it all boils down to this simple choice. At the end of every trading day, you just ask yourself, did we get a liquidity run or a liquidity sweep? If it was a run, your bias for the next day is continuation. If it was a sweep, your bias is for a reversal. This one piece of information will form the entire foundation of your daily game plan.
So we've covered the mindset, we've covered the strategy. Now let's wrap it all up into one last actionable plan that will get you on the path to actually mastering this stuff. Here's your homework for the week, and I'm serious, no more videos. I want you to open your chart, go back 20 days, and for every single day, identify whether there was a liquidity run or a sweep, mark it down, and then look at what happened the very next day. This is how you burn the pattern into your brain. And one final pro tip for you, if the daily chart ever looks like a total mess and you feel confused, just zoom out. The weekly chart is your anchor. It gives you that big picture context and will help you clarify what the real overall trend is.
And that's a wrap. Look, the real learning, the real progress, it doesn't happen here on YouTube. It happens on your charts, when you're putting in the work. So the best thing you can do for your trading right now is to close this down, open your charts, and start your week of practice. Now go do the work.
To correct execution mistakes, not to entertain. If this video removed a false belief for you, support the course. Like the video, share it with another trader who keeps buying higher highs. And subscribe so you don't miss the required next lesson. This is SMC Foundations. Think like institutions. We build context first,